Well, good afternoon, ledges. Now, you may remember in last Tuesday's trades that I showed a Bund trade that I did which occurred here. And this was when the market broke back beneath a level that I had on my charts that you can see here of prior resistance, and we came back and retested these support lows, and I looked for a move to the downside. If you want to review that trade, it was around 17.5 minutes into Tuesday's trades. But the important thing to note is that I said at the time when we were trading up here that although it was a very bold call to expect this to trade down here and basically reverse this entire up move, it was very, very high probability. And that's what I want to give you the statistics for today, which is the statistics for open drive failures in the Bund. So first off, let's talk about what an open drive is. So we're going to go on to a 30-minute chart, and if you have a look at this day in question, which was Tuesday the 17th, you will see that the market opens here, and once the first 30-minute candle has finished forming, the open is the exact low of day so far. That's called an open drive higher. The reverse of that would be this, which is where, again, after the first 30 minutes of trade, the open is the exact high, and that's an open drive lower. Now, let's go back to Tuesday's example, and what I'm going to give you the statistics for is the odds that if we get this open drive, whether it be higher or lower, that the market is going to come and it is going to negate it by trading, either in this example, at least one tick beneath the low, or if it was an open drive lower, it was going to trade one tick above the high. So when we've opened here, we have an open drive in play. You can see that we begin to move higher, and we leave this low as the low of day. So I was saying it was very high probability that we were going to come down and we were going to trade at least one tick through the open, and here are the odds for that in the Bund. So going back well over 3 years, taking data from the 10th of October 2013 to present, we have 120 open drives in total. The number of times that the open drive has failed at some point on the same day is 96, which means there is exactly an 80% probability that the open drive pattern is going to fail the same day, as you can see here. I wanted to take this a little bit further, and as a result of that, what I did here is I looked at the times that the market failed based on the half an hour closes. So for example, on 32 occurrences, the open drive had already failed by the half an hour candle that closed at 8 o'clock in the morning. So the interesting thing you can see is that when this pattern fails, which it does the majority of the time, it fails early in the session. In fact, the probability of it failing before 1 p.m. is 87.5%. And although the market is open, obviously, until 9 o'clock at night, the probability of it failing before 4:30 p.m. is 99% of the times it's occurred. You can see there is only one where it fails very late in the evening. So that's what you're seeing the data for here. Incidentally, sometimes you get problems with data. When you look back on your charts, you find that you've got some missing data, and I have labeled here some occurrences of where I have missing data, and generally with something like that I label it so over time, if I can source that data from another area, or I can work out why the data is missing from there, then I can quickly go back and update the odds up here. Again, it all fills in automatically when I type in the number of occurrences of different things. This study has also been done, as you may well know, by someone I've worked with called Hugh Hawkins, and he took the data back over 10 years, and the odds are virtually the same. So this pattern has stayed consistent over a long time, far longer than the data you see here. So as you can imagine, I use this a lot in my trading. Now, I'll tell you the problem with odds like this. The problem with odds like this is people don't trade using common sense, and they get themselves into sticky situations because they seem to forget that high probability is still just probability. So let me give you examples of things that people actually do. Let's say that they have an open drive, the market starts heading up, and it may or may not come into an area that they've identified as a good place to trade at, but they come in, they whack it short, probably take on too much risk because they get excited by the fact that it's so high probability, and the market begins moving against them. And as it moves against them, because they've made too large a bet based on their confidence on the probability, they don't want to get out and take the loser, and it continues going against them while they procrastinate, and at some point they realize that now the loss has become too big for them to want to take, and now they're sitting there thinking, Tom said the probability of it failing is 80%, let's just pray that it fails, and if it doesn't, they're going to take a huge loss. Of course, that is the wrong way to trade it. High probability is still just probability. Another thing that I've seen people do here is we'll get an open drive, and let's say the market just drives lower straight away, and they know that the probability is high, that it's going to come up here, and what happens is they don't see any setup that fits their rules. The market turns and the market starts to come up and the market starts to barrel in a straight line towards this area, and these guys are maybe bored, they haven't done any trades that morning, or they had a couple of losers, whatever their situation is, and they're looking for a reason to come in and to make money, and they see this market heading up and they decide to jump in. There's no setup there, but hell, they know it's 80% chance that it's going to come up here, so they get long, and maybe they think, well, you know, there's only 10 ticks to the target, but it's a high probability 10 ticks. Where am I going to put my stop? I don't want to get shaken out, so I'm going to put it all the way down here, which may be like 50 ticks away. And they'll get in that trade, and they might get a winner out of it. But the fact of the matter is, the payoff is too low on the trade, despite the high probability behind the trade idea. Simply put, there is no positive expectancy over time. You're making a poor bet. So let me show you how I traded this. Now, even though I knew how high probability the pattern was for failing, I still have to see my entry into the trade. So we come up on Tuesday and we're heading up into an area that I've marked out ahead of time as an area to short. Where is that area? It's this cluster of lows that you can see on the chart, last low pre-breakdown being here, and I want to put my stop above this thrust candle. This is on a 5-minute chart, and let's just mark out that stop, which is at 43. Let's just mark it in red. What happens up there? The market comes up close to that area, it turns away from it, and as it turns away from it, it begins to bounce off the last high pre-break of this little cluster and then begins to move towards the high again. And at that point I pull my order. Now I know a lot of people that wouldn't pull their order because they'd be wanting to get in the trade and focused on that probability. Have a look what happens. If you take it, you get stopped. But then see what I speak about on Tuesday, which is that I suddenly see that up here, the buyers get significantly cut off by the sellers. Then I see it break down on this candle here through the former highs. But still note that even on that point there, we only move back as far as this last little bit of support before we push to the high. It's when we break that that I come in and I sell the retest of the low and we head off lower. The point that I'm trying to make here is not what a fucking amazing trader I am. The point I'm trying to make is look how patient I am. Look how I'm sitting there and I know the odds are high and I've got a level, and look how I will wait and I will wait and I will wait for exactly what I want to see before I get involved. I've often said that the reason people don't have patience is because how can you be patient when you don't know what you're looking for? And that is a big part of it. But at the same time, there is the urge that people have to make money. And I would say you are far better off approaching the game with a desire to win, to not be beaten, to not put yourself in a vulnerable position. I want to quote a series of tweets. I made on Friday. I said if I didn't have insane patience, I would have lost everything a long time ago. The fact is there is A, the view, and B, the setup. No matter what A is, if there's no B, then there is no trade. So again, I can know the probability of this open drive failing, but if I don't see a setup with a high reward, low risk entry into it, there is no trade for me. The fact that I don't trade unless I have A and B is, I think, one of the main reasons I'm still going. Now you may remember that I only took 12 ticks profit on this trade, and you may be thinking at this point, well, if you knew it was so high probability and you've got a great entry and the market moves on side, well then why don't you hold? And the reason for that is because I trade from one level to the next. So if you go back and you watch the recording, and I really think it will help you understand what I'm saying here, if you do that, you'll see that it moves down into a level, I take profits, I wait for that level to break, except beneath, then I'm going to come in and sell the retest. Only on that particular time I got distracted, I didn't manage to sell the retest, but usually I would. And the point to fully understand that a lot of people tend to forget is that even on an 80% probability, what you're not being told is how the market is going to go and negate the open drive. So yes, we know the odds of where it's going, but we don't know how it's going there. And I like to trade from one level to the next. If I'm short, take profits at one level, wait for that level to break, and then retest. I find that that works a lot better for me. Does it have to be the way you do things? No, of course not. That's why I'm giving you these odds, so that you can make informed decisions based on them. But part of EFL is to show you how I do business. So you can use this probability if you're trading the Bund very successfully, but you still have to be careful. Again, you can't look at something like this and throw caution to the wind. There will be a lot of people out there that can trade based on an idea that has an 80% strike rate and still lose money. You know, I've seen it happen. But nonetheless, be aware of that, and I think you can do very, very well from it.